Welcome to our channel today. We'll discuss about Input Service Distributor, ISD, under GST, simplifying tax credit distribution. The Goods and Services Tax, GST, introduced a paradigm shift in the Indian taxation system. While streamlining the process, it also presented challenges in managing input tax credit, ITC, for businesses with multiple branches across states. The Input Service Distributor, ISD mechanism emerged as a solution, simplifying ITC distribution and ensuring seamless tax compliance. This document explores the concept of ISD under GST, its benefits, challenges, and practical considerations for businesses. Navigating the Maze, a comprehensive guide to Input Service Distributor, ISD, under GST. The Goods and Services Tax, GST regime in India, introduced a unique mechanism known as the Input Service Distributor, ISD, to simplify credit distribution within large business entities. While seemingly straightforward, the nuances of the ISD framework can be intricate, leaving taxpayers with unanswered questions and potential compliance challenges. This comprehensive guide delves into the complexities of ISD under GST, offering a clear understanding of its functionalities, implications, and practical considerations. Unveiling the ISD. An ISD, as defined by the Central Board of Indirect Taxes and Customs, CBIC, is an office of a supplier that receives tax invoices for input services and distributes the credit of central tax, CGST, state tax, SGST, Union Territory Tax, UTGST, or integrated tax, IGST, paid on those services to its branches or divisions using the same PAN. Essentially, it acts as a central hub for managing and distributing input tax credit, ITC, on shared services across different units of a business. Key features and benefits. 1. Simplified ITC distribution. The ISD mechanism eliminates the need for individual branches to register and manage their own ITC claims, reducing administrative burdens and complexities. 2. Improved compliance. By centralizing ITC distribution, the ISD ensures accurate and timely claim filing, minimizing compliance risks for the business. 3. Reduced costs. Eliminating the need for individual registrations and compliances for each branch leads to cost savings for businesses. 4. Enhanced transparency. The ISD framework promotes transparency by providing a centralized record of all input services and their corresponding ITC distribution. Eligibility and registration. Any taxpayer registered under GST can opt to become an ISD, irrespective of its size or industry. However, it must fulfill specific conditions. 1. All branches or divisions receiving and using the input services must have the same PAN as the ISD. 2. The ISD must register itself as an ISD on the GST portal in addition to its regular GST registration. Functionalities and process flow. 1. Receipt of invoices. The ISD receives invoices for input services used by its branches or divisions. 2. Credit distribution. The ISD calculates the proportion of credit to be distributed to each branch based on a predetermined formula or actual utilization. 3. ISD invoice issuance. The ISD issues an ISD invoice to each branch, reflecting the portion of credit distributed. 4. Crédit. Utilisation. Branches utilize the credit reflected in the ISD invoice in their GSTR2 return. Benefits and advantages. The ISD mechanism offers several advantages. 1. Simplified credit distribution. Streamlines the process of credit distribution, especially for businesses with numerous branches or divisions. 2. Reduced compliance. Burden. Eliminates the need for each branch to file individual returns for claiming credit on shared services. 3. Improved cash flow management. Enables centralized payment of taxes and facilitates timely credit distribution. 4. Enhanced transparency. Offers a clear audit trail for credit utilization by different branches. Key considerations and challenges. Despite its benefits, the ISD framework requires careful consideration. 1. Eligibility conditions. Ensure all branches comply with the same PAN requirement to qualify for ISD. 2. Determination of distribution formula. Define a transparent and justifiable formula for credit distribution among branches. 3. Compliance. Requirements. ISD must accurately file its own GSTR6 return and ensure branch compliance with GSTR2 return. 4. Record keeping. Maintain meticulous records of invoices received, credit distribution calculations, and ISD invoices issued. 5. Data reconciliation. Reconcile ITC claimed by branches in their GSTR2 with credit distributed by the ISD. Practical tips and best practices. 1. Conduct thorough training for personnel involved in the ISD process to ensure proper documentation and compliance. 2. Develop detailed internal procedures for credit distribution, invoice issuance, and data reconciliation. 3. Utilize accounting software with robust features to effectively manage ISD transactions. 4. Seek professional guidance from tax consultants to address any complexities or uncertainties. Conclusion: the ISD mechanism under GST holds immense potential for streamlining credit distribution and improving compliance for large businesses. However, navigating its intricacies requires a thorough understanding of eligibility, processes, and compliance requirements. By carefully considering the benefits, challenges, and best practices outlined in this guide, businesses can harness the advantages of the ISD framework while ensuring seamless operation and adherence to GST regulations. Thanks for watching.